Hey Jack, welcome to this little chart analysis here. I wanted to shine light on something that's been happening in the markets. I want to do this kind of more often than not. I'd like it to be kind of a morning update thing, just on the markets, but maybe daily, maybe not. I just wanted to talk about what was happening in the market and to kind of just put some calm in the market when things are going wild. And today, the date is the 16th of November 2021. The price of XRP is $1.10. It's been wild today. Bitcoin is at 60,691 and Ethereum is at 4,311. And as you can see on most of them, there's been a bit of a dip today. A dip in the market of well, let's see, there was up to a 10% dip, back down to 5% now. And I just wanted to give people perspective really on what was happening in the market and not to worry. These videos are not about analysing narratives or looking at the news. They're simply looking at how history repeats itself. And if that's something you enjoy, then please do subscribe and hit like so more people can see it. I try to make things as easy to explain as possible and almost entry level as possible. But of course, if you're looking at charts already, you've probably been into crypto a little while, and at least you have some understanding. But the thing I want to talk about today is basically my price targets for Bitcoin and Ethereum and XRP. I have no issues with saying that XRP is basically my sole holding at this point. Some mistakes were made in this cycle where I cycled out at the wrong times of coins and ended up in XRP, which is notoriously one that moves at the end of the market. It's the last one to move, so I'm kind of stuck in XRP for the rest of this cycle. But I do have my price targets for Bitcoin and Ethereum, although I do not own any. So let's get into Bitcoin first, because you probably have some Bitcoin. And I just want to introduce everyone to what's called a Fibonacci retracement. You can find that on the left here. I use charts.cointrader Pro, and they allow you to see the full timeline of Bitcoin, which is really, really helpful, all the way back to May 2nd or even earlier in 2013. So come over here and you can click this little arrow here next to this fork, come down, and you've got a Fibonacci retracement. What we've found over history is that the Fibonacci retracement can actually be a great indicator for the height of the next bull market. So typically with a Fibonacci retracement tool or extension tool, you click the top of the market, you pull it down to where the bottom was, which you can see is right here over in January 12th. You pull that across so you can see clearly across the board. And you can see here that typically at these lines, these Fibonacci lines, please comment if you want me to make a video about the Fibonacci extension tool. You can see that these lines play a role in supporting and resisting the price over time. So as you can see here, it had difficulty here and it bounced around this line, it came up and it bounced off this line, bounced off that line, you get the point. And again here, and all the way to the top. But what you'll notice is that the upper range of this Fibonacci tool doesn't actually get to the peak of the market. Now, something I learnt recently about Fibonacci tools is that this 0.236 line here that is drawn here, you can actually use that if you put the top of the market of the previous bull run onto that line, onto that 0.236 line. If you drag this line up to this point, it eerily shows you beforehand where the top of the market went. Now, this isn't new news. This is something that's existed. If you look, this is the 2013. This is using the 2013 bull market and the 2015 bottom of the market to dictate or to predict where the 2017 market peaked out. Now, if you had your sell orders up here and here, you took all profits at the maximum point. So we can actually use this way of doing things to predict the prices of things in the future. So as we've done it there, I'll take that away and I'll show you this one now. Okay, so we've got the top of the market in 2017, pull it down so we can see the bottom of the market at that time period in the 10th of December 2018. That was the bottom of the market there. So you can see that if we take the top of the market and the bottom of the market and use that as our price prediction, you can see that we're actually eerily close to the end again. Now you'll notice that's not the exact same thing I did on the last one, but let's see where that would take us. So let's bring that 0.236 line up to the top of the market here in 2017. And all of a sudden we have now price targets of 307,000, 263,000. The reason that I don't think this is still in play is just because I just don't see the price getting there. Just the way Bitcoin's acting, I tend to think that we're somewhere around here. This top of the market and this bottom of the market is ultimately going to be the predictor of Bitcoin here. That's just my opinion. There's a few reasons why we might think that. One of those reasons being the fact that we can take a look at the bull cycle, that last leg from here in November 2017 for Bitcoin, taking it all the way up to the 15th of December for Bitcoin, and putting that at a similar spot right at the bottom here. If you remember that massive crash and it dipped all the way down to here, that's basically what happened over here. It made a big retracement. You could even call this a big retracement, look. So we take the measuring tool. This was a 26% drop that we had there, and a 36% drop that we had there. And then when we compare that back to where we were, so from here, drag that down. Okay, we got 46, so there was a bigger drop in that one. The point is we always get a nice healthy drop before the price starts to explode, and there's a minus 20% there. So you could safely assume that the bottom that we see over here before the big bull market is replicated here, at which point you put those lines out and it puts you up at 93,700. So I tend to think that that's more realistic if history repeats itself. If history repeats itself, you're looking somewhere in the range of here, I would say. So anywhere between, well, we've already reached that 65, between 68,700 and 94,000. So I would say anywhere in that range is kind of conducive to what has happened in history before. So how can we use this Fibonacci tool to then gauge where coins are in the market? Because obviously we want our money to be in coins that haven't moved yet. There's an argument to say Bitcoin has moved, and there's an argument to say Ethereum has moved also. If we take that to the bottom of the market, from the top to the bottom, there's not much room there left for growth for Ethereum. If we're looking at getting up to this mark here at the top of this Fibonacci retracement, the 4.236, we're looking at only a 32% increase from here for the rest of the market. So if you look at this, you can see at the Fibonacci extensions, Ethereum's way at the top, Bitcoin's way at the top. But what about XRP? And that's what we're just going to do right here. We're just going to see what we're looking at basically for XRP. So we got the 2017 top of the market. We know where that is. We take it down to the bottom of the market here. And as you can see, we haven't even got started yet with XRP. So when you're looking at things that have happened today in the market, XRP always takes a massive dip when everything else takes a dip. It looks like we could potentially be coming back to test this Fibonacci extension at the 0.236 mark. And obviously the targets for XRP, which I have no shame in saying, are all the way up here at $15 to $13, $12. So we can see that XRP is not moved. And we can see that in the last time it peaked in 2013, XRP, we can use that as a retracement. And you can see that the lines here eerily match up to the top of XRP. So we're just doing the same thing here. It's done it in the past. It's moved from all the way down here to up to these upper levels of the Fibonacci retracement. Let's see if we can now predict where this came in. And like I did before, you can actually move this 0.236 Fibonacci retracement line Funnily enough, you bring that up to the peak of the market and you get to the area where it might have been a good time to sell. I just find that very, very interesting. It's kind of predicting at the upper side of what these coins can do. At the lower side, obviously, you're looking at here. That's been done before. That was an alt cycle in this one. In the actual full bull run, you notice that if we bring it up to the top of the market in 2013, you can see that accurately predicted the pump, the retracement, and the repump to revisit those sell orders at the top of your Fibonacci extension. Very interesting indeed. So that's where I'm getting my thoughts from. There's other ways you can do. You can make some guesses here for XRP. Okay, let's take the bottom of this market. This is the 2017. That's the altcoin market. The 2017 bull run, the big run at the end, the one that every coin went on. You can take that. Let's put that at the bottom of the last retracement that it had, which arguably could be this 0.236 line. Funnily enough, we end up there. What about if we took the 2013 bull run? Okay, so we take it from the bottom of the retracement all the way up to the top, and we place that on here. Okay, so we actually hit another Fibonacci line there, the 2.618. That's very interesting, don't you think? Also, let's maybe take the last leg of the alt cycle, what XRP was able to do right at the end. Funnily enough, in the same area. I guess we could do this as well from the bottom here. Taking this little pump, let's see what XRP did in this little pump. Funnily enough, we're at that area yet again. So these are my take profit points for XRP, just because when XRP pumps, this is what it does. This is what XRP does when it pumps. And so I just want to get some calm in the market, understand that the price for XRP could go back down to 99 cents. And if you've got some extra cash in the market, it might be worth putting some buy orders in at $1 or 99 cents. It could wick down there. And I would actually hazard a guess that if it does wick down there, then we're off to the races and we're looking at kind of these levels. If you want an ultra bullish target for XRP, we're going to bring that 0.236 line all the way up to the top of the 2017 market. And we can see that the upper end here is down at that $68 mark. I can tell you my exit strategy in another video, but I do have one sell order all the way up here ready to go. Although that is only 10% of my portfolio value. I hope you found this interesting. If it's a bit too much information, do let me know. I want to kind of improve these as time goes on, and I want to do nice quick ones as well. But those are my price predictions for Bitcoin and XRP. I know I didn't get into Ethereum, but Ethereum at the upper end here. But in Ethereum at the upper end here, I'm kind of looking at the $5,772 being the last sell order. Obviously, it could overextend. It has before. And Bitcoin up here at the 74,000 mark, all the way up to the 90,000 mark is would be where I would be selling in Bitcoin. All right, that's all for this video, and I'll see you later, Jack.